The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks. And I've got two more stocks for your aggressive growth stock radar screen. Let's get right to it. The first one is Funko, and the ticker for Funko is FNKO. It's a Zacks rank number one. That's a strong buy. And it has a B for growth and a B for value. And, you know, A's and B's are what I'm looking for when I'm doing this video. I want to see a strong growth score. So let's roll through this and take a look at why I'm doing Funko. We always start with the earnings whenever we look at something. And earnings are a good indication of what's going on with the company. It tells us, can management communicate to Wall Street? And it looks like they can communicate a very beatable number. And I mean a very beatable number. Look at this average, 160% all beats. So they are, in effect, doubling the number, sometimes tripling the number right there, tripling the number, but easily doubling, easily doubling, easily doubling, making money, making money, making money, making money. Great to see. So the earnings scorecard is wonderful right there. Let's take a look at the estimates. What are the estimates doing? And that's really the foundation of the Zacks rank here. What are the estimates doing from the last 60 days? We see a penny move up. That's nice for this quarter. Next quarter, nothing. You know, just kind of 28 cents the whole way through here. Full year, boy, oh boy, look at this. This is weird. 17 cents from 21 cents. That's not what we want to see. Next year, $1.30 to $1.32. That's interesting. It's a Zacks one, and yeah, that could be a little ghost in the machine. We don't usually see a decline in the current year earnings estimates. We always see growth in next year's earnings estimates. So let's go ahead and take a look at the valuation here. 15 times earnings and 2.6 times book. That's going to keep the value investors very interested. And then over one on the price to sales, which is, you know, always good to see. But, you know, here's your growth right there. There's your growth. Don't worry about over the, you know, sequential growth. It's always great to see sequential growth and if things like that are rolling. But 140% year over year. What does this tell me? And then we'll just do a quick little look here. The margins. Margins go from 362 to 679. That's great. That's great to see. But that big growth is, and you know, that's something else. We've heard all this talk about Christmas shopping being forced to start a lot earlier, and maybe it started even earlier than we thought, and maybe the companies were already making their orders and getting their little Funko toys. You know, they make those little toys. They're getting them in stock before. Long before the November rush, or, you know, that post right after Halloween. It seems like, okay, now we're mad rush to get to Christmas. Okay, so that's fun. Well, oh, wait, we got one more thing to look at Funko here. It is the chart, and we can see the earnings estimates. This had a little bit of a ride here. You know, I guess that was the pandemic down, and then, you know, back up, and then earnings look to be taking this thing much higher. So this is a stock to keep on your radar screen, because those earnings right here, these two earnings lines, they are nice and high up above where the current price is. And, you know, not that it's a guaranteed thing that the earnings are going to, you know, make the stock go to wherever it is on the chart, but it is an indication as the earnings keep on moving higher that the stock will follow through with it. All right, so that is Funko. Let's take a look at our next one. You might have seen it on my tabs up above there, but it's NVIDIA. NVDA. I didn't name my dog NVIDIA or anything. I named him Buckeye because I'm from Ohio and I love my Ohio State Buckeyes. But I know someone that talks about, has a show, and I think it's called Insane Currency or something like that. He calls his dog NVIDIA. Crazy that he does that. All right, so it's an F for value and a B for growth, and that is what I love to see. I love to see those growth divergence there. So there's my little smiley face for the growth divergence. We've got a strong growth score and a weak value score. That tells me right away I'm on the right path because I am all about aggressive growth. Let's go ahead and take a look at the earnings, and we can see beaten and beaten and beaten and beaten. You know, these are thin beats, though. These aren't these, you know, multiples of the estimate, because this is NVIDIA. It's a big company. It's, you know, it's widely followed. The analysts want to look smart on this thing. The Funko doesn't have the same breadth of coverage. You know, just look at all these people here that are submitting estimates. You know, lots and lots. Let's go ahead and take a look at these estimates. Look at this, moving from that looks like $1.03 to $1.11, $1.01 to $1.09, $3.96 for this year, up to, what did I do? Did you see what I did there? Okay, $3.96 to $4.14, $4.37 to $4.63. Those are 4 solid arrows up. As you can see, each one of them is even bigger, even better. We love to see that. That's why it is a Zacks rank #1 positive earnings estimate revisions. I'm going to sneak up here and show you another little thing that I like to look at here. And this is the growth projections, sales estimates for the current year. 55% this year, and it's going to tame down next year. I think a lot of companies are seeing this big, gigantic growth spurt here because of COVID. Everyone slowed down, and now there's a glut of demand working through that. All right, let's do a quick little run through of the valuation. We got a 50 times multiple. Boy, oh boy, that's a lot. 24 times book price, that is a ton. And boy, oh boy, 23 times sales. That is just a lot. But we can see we're justified in it. We've got 68% top line growth in the most recent quarter. Still looking for 50-some% for the year, which we just took a look at. So that's always good to see. Margins, how are you doing? You're going 30.6 to 32 to 33.6. That is looking good. I love to see that. Solid margin growth. Top line growth means earnings are moving higher. Now let's look at this chart. Oh my God, this is a buy and hold forever. I mean, woo! That is great. That's the stuff dreams are made of, to be honest with you. And you could buy that thing, hang on to it, and you know, a few years later you wake up, this thing goes from 40 to 250. Oh man, boy, why didn't I buy that back at 40? That's what I always think when I see these charts. I hope you don't think that way like me. But the question is, will it continue on this trajectory? And as we look at the earnings line here, this top earnings line, that one looks super strong, and that's next year. That keeps on moving higher. And anytime we see that, we can expect the stock to follow suit. All right, that's it for me this week. Look for us next week when we do another 2 aggressive growth stocks. And make sure you go to Zacks.com/weekly promo to check out all of our latest promotional activity. Go there to get yourself the best deal you can get on a Zacks service.